Term insurance is something that is very important for an individual to have, particularly if they have dependents, financial dependents. And this is something that has been spoken about on this program quite often. Term insurance is life insurance that covers the risk of loss of life. That is, it ensures that your financial dependents have a certain amount of money available to them if you're not there to take care of them. Now, there is a conversation that is taking place about the need for homemakers also to have the option to buy term insurance for the people that depend on them. Joining me to talk about this a little bit more is Santosh Agarwal, the CBO of Life Insurance at PolicyBazaar.com. Thank you so much, Santosh, for taking the time. The principle of life insurance, as it has been described in so many fora over the years, how it is also sold, is that an earning individual safeguards the loss of income down the line. So this is kind of a change that will need to take place in the mentality that people have, right? So what really are we talking about when we're talking about homemakers getting term insurance?
Absolutely. I think it's a big step towards women empowerment. It is for the first time, in a way, recognizing that you may be a homemaker, but you actually generate income, because if you were not there, the household expenditure would go up in managing the house and raising the children, which means that you are contributing to wealth generation of the household, and hence your life is valuable and needs to be covered also, because if you are not around, the household income has to be much more to take care of the livelihood. So I think it is a much needed step, and I think I'm glad that it's the right time that insurance companies have now realized it, given the challenging COVID times. I think it was just a high time for the industry to recognize this and do something about it.
Santosh, the concept of the contribution that homemakers have, this has been debated in economic fora quite often, especially in the recent past. You had a former Reserve Bank of India Governor Raghuram Rajan talk about this at length. Now, whether or not that debate finds a conclusion, it is true that there is a significant contribution being made by homemakers. Whether it gets added to the GDP or not, that's another question. But how does one understand the kind of premium one has to pay, the cover that one needs to be able to take? What are these factors that one needs to know about?
See, the way to go about it is the fact that you will need to assess, given that you're contributing to the household by managing the house, raising children, what is the value in economic times that in a way, what is the economic value that you are ascertaining to the household and generating? And the right way to do it is that if you were not there, how much more expense the family would need to incur, and calculate that for a number of years, that till your children grow up and they're independent, etc. And basically a thumb rule to basically just do that. The way we calculate a person who is earning, how much cover does an earning person require? What we do is take the person's income, the annual income, and multiply that by a certain number given a particular age. So the general thumb rule is to multiply it by 10 times. If you're younger, you can multiply it by 20 times. So say, for example, if you're 30-year-old and you're earning, say, 10 lakh rupees a year, then the right amount of cover for you, say, is 2 crores. You could use the exact same formula by saying that this is the amount of expenses that would go up if you were not managing the house, and hence you can ascertain an income value to yourself, and then multiply that by 20 times if you are younger, or multiply that by 10 times if you are beyond 40 years. So that would give you a sense of how much is a cover that you would need to buy for yourself, and that should be adequate for your family if in case something happens to you.
Okay. Now, in the past, it's not like this wasn't available, right, Santosh, in that there was an option available for homemakers to get term insurance, but there were restrictions in terms of how much that term insurance could be. Has that changed now?
What has really changed is the fact that earlier, if you were a homemaker, you were dependent on your spouse taking a life insurance policy. Unless your spouse had a life insurance policy, you could not buy a policy. What has changed now is, irrespective of whether your spouse or the working individual, if your spouse has not taken a life insurance policy, that is okay. You can buy a term life insurance cover for yourself, even if your spouse has not bought a cover. That's the real change. There are other restrictions around how much of cover you can buy. So generally, you will be allowed to buy, a sum of 50 lakh to at max a 1 crore of cover. You will not get large covers of 5 crore, 10 crore. That still stays. And the fact that the basic household income needs to be beyond a certain threshold, which is generally 5 lakh rupees a year. So those are the restrictions that apply, but that's the large changes, that you're not dependent on whether your spouse has bought a policy or not.
Okay, fair point. And just a last point, in that there will be some people who say that if this is not necessarily about the money, right? So Santosh, what I'm trying to get at is that especially when you're talking about a homemaker, this is a kind of an emotional issue as well. How do you assign a value to that? The loss of that individual, you're putting a monetary value to the work that they do. So is that something that sellers of this policy will have to contend with when they go out?
See, I think one thing that we all recognize is the fact that a homemaker, the value that a homemaker adds, irreplaceable. It's not replaceable. You cannot add a monetary value to that. What we're trying to do through this exercise is that, given that you contribute so much, at least from a financial perspective, your contribution, can that be measured? And that contribution, financial contribution, if that can be safeguarded for your family so that they can carry on with their lives, that's the whole endeavor. And in that endeavor, I think it's just one step in that direction, where we are saying that, it's a crude method of, I would say, kind of analyzing how much income you indirectly generate, and that's the value we're trying to safeguard. But I would say that, all of this is only so that your family can carry on, and I would not say that this is the right way, or this is just saying that this is the value that you generate today, 50 lakh or 1 crore. It is absolutely not what we would want to convey, or the industry is trying to convey.
Okay, that's a fair point. Thanks so much for joining in and for talking about this, because I think the more we talk about it, the better it is, the more people get to know about these things. Pleasure speaking with you.
Thank you.